Hi, Michael Lapede here from KD, talking to you about financial statements in this mini-series. And in this video, we're going to talk about an introduction to the statement of cash flow. The main statements you're going to see on the financial statements are the balance sheet and the income statement, along with that statement of retained earnings. But some financial, especially for larger companies, will have a statement of cash flow. Cash flow is not the same as net income though, right? We talked in the last video about net income. After all expenses, what do I net? Cash flow is different. You may be waiting for money to come in from accounts receivable. Some expenses are non-cash, like depreciation on assets. So net income will never be the same as your net cash flow. Think of a rental property as an example. If you have a rental property, you may be paying out the mortgage all the time, and you go, I'm not making any cash flow on this rental property, I'm net zero. Meanwhile, in your tax return, you show a profit because the principal was non-deductible. So again, cash flow may be zero, but profit would be different. In a company, that's the same thing. It's different from profit to net cash flow. So cash flow is not on the income statement, right? Because it's just income and expenses. And you got to keep in mind that when it comes to cash flow, there are also some other factors of cash flow that might come in. For example, if you receive a loan that goes on the balance sheet as a liability but goes into your bank's cash flow. So financing activities, investment activities, these all go into the cash flow. There's really three categories that cash flow breaks into. One is your operating activity, so the cash flow of income and expenses going in and out, paying bills and so forth. Investing activities, such as making an investment, receiving investors, things like that. And then three is your financing activities, again, back to borrowing money, lending money, and so forth. So all three of these affect the cash flow. Cash flow statements provide an accurate understanding of the actual cash that came into the company and went out. How do you increase cash flow? More coming in or less going out, right? This is much different than the income statement. Remember, the statement of cash flow is simple as how much cash came in, how much cash went out. And if that's negative, even though you show profits on the income statement, you could have a cash flow problem in a business, and that could wreck it. Even though you're making profits, you could still go under because you didn't get the cash flow. Thanks again for being a part of our business tips. Please post in the comments below, and we'll see you in the next video.